All right. Hello again, everyone. It's Dima Khoury with Compass in Burlingame. So today is November 7th, and I hope you're having a great Saturday morning. And today I'm going to bring you the most recent activity in San Francisco market and to talk about a little bit the US economy and how this is impacting the real estate. So we're still at historic low interest rates. We're at 2.80% today, which is really low. This could be the lowest point before the interest rates will start going up. So this is for the people who always try to time the market. This might be it. This might be really the best time to buy. So if you are a buyer who haven't yet bought your property, your dream home, your first property, this is really a good time to lock in a great interest rate. And economists are expecting interest rates to increase next year. So let's look at some numbers and see how this will impact you as a buyer and your purchase power. So let me share my screen. All right, so again, we're at 2.80% for 30-year fixed and 2.33 for 15-year fixed and 2.87 for a 5-year arm. Now, the MBA or Mortgage Bankers Association chief economist is forecasting that mortgage rates could rise in the years to come. So 2020, we're at on average 3%. Today, we're 2.80. 2021, they're expecting to increase up to 3.3% and moving forward 3.6 and 3.9%. Now, how would this impact your purchase power? So in today's market, at an interest rate of 2.8% with a mortgage amount of $280,620, the monthly mortgage payment is $1,153. Now, if interest rates increase to 3.3%, then there will be an increase in the mortgage of $148. And as we all know that the average sale price in San Francisco, it's 1.3 to 1.5 as well, just very similar to San Mateo County. So we need to, so this number has to multiply 4 times. So we're talking about to get to 1 million, 1.2, 1.3, which means that this number will also increase. So this means that there will be, if we multiply this by 4 or 5, and by 12 to see how much we're saving or we're losing next year extra money, it's going to be around $9,000, and that's only for the P&I, which is a principal and interest. So again, this is some information for you as a buyer to understand what the interest rate increase would mean to you in the future. Now, this chart shows us the GDP recovery, how the forecast was back in April. And so Goldman Sachs, JP Morgan, and Morgan Stanley, they all expected a V-shaped recovery, a quick bounce back. And this is actually what happened. So we did bounce back very quickly. And in quarter 3, we're way above quarter 1, which is great news. Now, as per the Wall Street Journal, economists are forecasting growth at a 32% annual pace, a record-shattering number that will underscore a stronger than expected rebound from the effects of the pandemic. The headline number, however, will partially mask what so far is an incomplete recovery and what appears to be a slowing recovery. Now, let's look at more details on San Francisco market and how many properties came on the market. So the total number of properties that came on the market are 145, and 89 of them are condominiums. And the number of properties that went in contract are 163, and 96 of them are condominiums. So comparing these numbers to previous weeks or the week before, we can see there is a drop of 20% of the number of properties that are going in contract and even the number of properties that are going on the market. And probably that's because sellers are thinking that this is um, they're unsure about what's going to happen in the next few weeks due to the election and coming into the holidays. So that's why mostly there are less properties coming on the market. Now, the number of properties that sold are 110, and 62 of them are condominiums. And the number of properties that came off market between canceled, expired, or withdrawn, or on hold maybe, 95 properties, and 74 of them are condominiums. Now, the absorption rates, let's look at the numbers that would show us how many months or days will it take to sell everything that's on the market. So with regards to single family homes, in San Francisco, we need a month and a half to sell everything that's on the market. While for the condominiums, it's double the number. So it's three months and 5 days. So we can see the difference, but both numbers reflects a seller's market. Now, the single family home reflects a way bigger seller's market, stronger seller's market than the condominium market, yet they both fall into a seller's market because anything under 4, it's a seller's market. Now, let me show you more information about, some more information about the San Francisco activity, the real estate market activity. So this slide shows us the active condos and co-ops listing on the market in Q3. So we can see that the highest number of condos are in South Beach and Soma Mission Bay. So we can see that this area is by far the largest condo market. And this district in specific is dominated by new recent large projects and high rises, which includes, again, condominiums. And the one that comes right behind it is like less than half, which is Mission and Dog Patch, Potrero Hill, Burnell. Now, the lowest one is Sunset District. We can see that this district is the lowest to offer condominiums coming on the market. Now, the active listings on the market, in terms of number of active listings on the market for the houses. So we can see that Bayview, Excelsior, and Crocker, Amazon, this area is the highest to bring single family homes on the market, and follows Noe, Eureka, and Coal Valley's Glen Park, and then Sunset, Parkside, Golden Gate Heights, and then the lowest district that brings single family homes on the market, or that brought single family homes on the market in Q3, is Russian Hill, Nob Hill, and Telegraph Hill. Now, these two coming slides compares all the counties in the Bay Area in terms of average days on the market. So this is the San Francisco days on the market. Now, we can see that all San Francisco, on average, it's taking condos to sell 43 days. Now, the longest is in Bayview, Hunters, and Candlestick Point, 62 days. And the quickest is 30 days, where we can see it's in Hay Valley, Noe Park, and Lower Pack Heights. Now, okay, so these are the slides showing or comparing the listing accepting offers or selling, comparing all the Bay Area counties. Now, we can see that San Francisco is the lowest county to accept, or in terms of percentage, accepting offers. That's for the condominiums and the single family homes. So there's 50%. Or 50% of the properties that are coming on the market are accepting offers at a 1.66 million of a median price, and 30% of the properties coming on the market, single family homes, are accepting offers, condominiums at 1.25 million at the median sale price. Now, looking at San Mateo, which is super close, and okay, so all right, so San Mateo is 61% for the condominiums, and for the single family home, it's 44%. Now, this slide also shows us the demand versus supply, comparing quarter three versus quarter three 2019 versus quarter three 2020. So we can see that San Francisco, the number of properties accepting offers has gone down lower than last year. So last year, the same quarter three, we were at 41% accepting offers, yet today we're at 36%. And the quickest area, which is accepting offers or selling, it's Solona County, Contra Costa, and Alameda. So there's more obviously demand on properties in these two counties. Now, going back to this slide, we can see that the highest selling counties in terms of condominiums are single family homes are Solona, Contra Costa, and Alameda. So it's very similar in comparison to last year as well. So this is basically what's happening in San Francisco market, and some more information on the U.S. economy and some forecasts on what's going to happen next year. So we're hoping that interest rates will still continue to be at this low point to allow buyers to get into the market. And this is actually creating great activity in the market. And this is good news also for sellers, especially knowing that there will be more buyers coming on the market, hopefully in the next month or so. So I hope this information was helpful. If you need extra information about your certain property or district, please feel free to reach out. I'll be more than happy to provide you with any extra information. Have a wonderful weekend. I'll leave you now, and please be safe.